It is September 19th, 2024. Index options expire today. Just throwing that in. I'm Tim Quast, and with me are Brian Wilson and Henry Howard. And this is the Edge live demo and discussion. Okay, so here, because I have terrible connectivity here in whatever tiny little Texas town between Sweetwater and Abilene that I'm sitting in offers. So I will keep this very brief. I wanted to make essentially two observations. If you're new to Edge, and we went into this first rate cut since the rate hiking cycle began, and I wanted to look at broad sentiment, and I'm sure Brian is going to do this too, to show you that it's a very useful tool for understanding what's occurring. And when there are disconnects from the data, they only happen at these major sort of milestones in the market. I think I'm going to, Henry, can you just holler if I'm breaking up at all, and I can try
We're
dropping.
Doing great, Tim. I'm just
Okay.
gonna let you keep going. We're just fine now.
Okay, good. Glad to hear it. Okay, so you can see my screen, which is kind of remarkable. Here's what I want to show you. So again, if you're new to Edge, I will explain these three graphs really quickly. So there is the green part of the graph here, and if you're colorblind, just look at it this way. The one that stays between, this, see this 10-point graph, the primary y-axis, that's the green part of the graph. The gray part, that is the price of SPY, and it will default to roughly I think this is a 90 trading day view. I believe that's what it is. I could be wrong about that. Certainly you can change it. So, you just drop this down, and we have the profiler default, which is 90 days. So maybe this is a 60-day view. I haven't counted it. I just, I use it all the time. But what it's designed to show you is the relationship between demand and algorithm that calculates how trades are executed. That's what it is. Can't consider all prices to be equal because all the behaviors in the market aren't. Active money, the money that picks stocks, is about 10% of trading volume, believe it or not. Passive money that follow, so you can think of that as indexes, exchange traded funds, quants. I'm keeping it very simple. They trade in different ways. They're different vehicles, but that is, we would call that passive money that is interested in characteristics. Active money, story. What makes something unique, differentiated? Is there alpha in that investment, outperformance versus the risk everyone else is taking? Passive money is the opposite. It wants the herd, beta, the performance of the market. Then you have what we call fast trading, that is responsible for setting prices. It is the pursuit of price. Passive money is, call it 25% of volume. So now you've got 35% of total volume. Call fast trading about 50%, half of all volume. Now you're at, roughly, it'll vary a little bit, 85%, and then trades tied to derivatives, 15 to 20%. There's going to be fluctuation, and we look at averages. But the point of that is that all of that money comprises demand, and they have different purposes and time horizons, and we can see how they fluctuate. So generally, when demand rises above this red line, that is a point where the market will decline. Doesn't always happen, but it's a very good read. Happened both of these two times where that condition existed during the period that we're looking at. Down here, supply is short volume. The market depends heavily on shares that don't exist to perpetuate what's called the continuous auction market that the SEC has propagated under Regulation National Market System. And notice that it's 50% of trading volume. 50% of trading volume is borrowed, created, short. Very little of that is actual, I'm betting that something is going to go down, so I borrow shares and sell them into the market in the hopes I can cover them at a lower price. Most of it is market making. Citadel, Susquehanna, Hudson River Trading, QuantLab, Two Sigma, machine driven behavior that really wants an investment horizon of a day or less and takes just a little piece of it. So how those things, hey, Brian, if you would just mute yourself. Okay, thank you. So here's where we are. This is what happened yesterday. So VIX expiration, see that little green box there? These green boxes, if you can see my screen, are options expiration dates. Notice that the demand was declining and supply was too into this Fed rate hike, and the market went up. That's a very unusual condition. And it tends only to happen around major events. You could go back to the last time that this occurred. I'll take you back, but for the sake of time, I'll spare you. But you could go back to when the Fed ended the rate hiking cycle, October 31st, roughly 2023. Similar conditions. So when these things happen, when you see demand falling, and that should mean that the market falls, and it's doing the opposite. Well, it's the presence of a lot of derivatives, a lot of hedging, a lot of betting about what direction the market's going to go. And I don't know precisely what's going to happen. I'll finish with that. That'll be point number two. But when the market stops doing what the data indicate, it's because of things that will have an effect that is not known. And it can be very helpful to us. I've been very careful about trading here. I'm not going to miss out. All I care about is the value of my portfolio increasing when I trade. That's all I'm after. I don't care whether what the market does per se. We want high probability trades, and we want to protect ourselves from risk. So let me show you one other thing, and then we'll talk briefly about what's ahead. So you can look up SPY. It's the only ETF we have on the platform. ETFs are tracking instruments. So if we include them, they would distort the supply-demand view. So we don't, but we have this proxy. You can't find it in a portfolio because all the portfolios would require one to cluster by belonging to a sector, and it's everything. But you can look at the supply-demand balance in SPY because oftentimes it's used as a hedge. It's exposure to the S&P 500. But if you're constructing a portfolio and you don't know which way the market's going to go, perhaps you're long the underlying and short the ETF. And you can see that here. Look at this dramatic rise from about 45% short in SPY to now yesterday, 64%. That can be unwound very quickly if the market hangs together. I don't know what's going to happen. I'll walk you through that. And demand picked up too. SPY is not a good way to figure out what the market's going to do next because the stocks determine it. So we use broad market sentiment for that. But it is a great way to understand that people didn't know what would happen here. There was no certainty. So I'll take you back to broad sentiment before I can conclude, and I'll show you something that led us to conclude, well, I think people are hedged for downside, but then broad sentiment had bottomed. What tends to happen when broad sentiment bottoms? The market rises. So this, though, is the wild card. There's a massive amount of shorting in SPY. Unless that unwinds quickly, it could mean that when new options trade on Monday, that the market will have peaked and declines. I don't know. But these are the things we think about and we try to share with you because our job is to try to give you the best information from a market structure perspective to help you be successful and to avoid risk. Going back to broad sentiment, Brian Wilson wrote the market desk note today, and he said, look, the demand has bottomed and is rising again in the broad market. If you look at the whole dashboard, just about anything you pick. I use a mega caps portfolio because it's like 77% of all market cap. And all I do as the criteria is take stocks equal to mega cap. So you can go out here with the create portfolio and use a filter just like I'm doing. And the only criteria I have is market cap is equal to greater than 100 billion. That's the only thing I'm looking at. So since it's so much of the market, the fact that demand is rising and supply is falling, that's a very bullish signal, right? You look at big tech, rising demand, falling supply. You could look at almost anything and this would be true. The interesting thing is the market could top very quickly. If we look at this, Brian mentioned, we can measure the daily and the average. The 5-day rolling version of demand in the market is what we use here. If you took a daily read, it's already at 5.3, could be at 6 tomorrow, Friday. So Friday could triple witching, index rebalances. Then Monday, the new series will trade. When you have tremendous price displacement in the market like this, it can mean that things change very quickly. It's just important to know as a trader. This is how the difference between making money investing in the U.S. equity market and losing it is being aware of these things that are occurring. We always say it's broad sentiment, context, what's occurring, the rate hikes, and then this whole options expiration series, a very big deal. September is a big deal for everybody because some funds will try to be aligned for the year at these rebalances. And wow, have we had a lot of intraday volatility, difficult to do then. And then look for divergences, BCD. Those are the things that we use over and over. And so summing up here, what may happen? Well, we know we have divergences. We know we have good short-term opportunity for gains. The problem is context. We don't know who's going to win or lose here. That's why I think, just be very careful. And you probably don't want to have exposure over the weekend. I don't know what will happen tomorrow. You could look at the data and say there's a very high probability that the market rises. The problem is we don't know what the consequence of the derivative side of the equation, which is all recalibrating here. Yesterday, VIX expirations, today, index options expirations, tomorrow, the full boat plus S&P quarterly index rebalances, and then Monday, a new series trades. Well, I'll tell you, those are things I like to avoid because they can just be very dangerous. So I will conclude my comments there and hand the rest of this meeting to Brian and Henry, and they'll steer you well. And I hope to be in a much better position next for the. I should be, rather than the backseat of a car for the next live demo. Thanks, everybody. Brian, over to you.
Yeah, Tim, thank you so much for joining us, taking the effort to be here. We really appreciate that. I think I'll just do a mic drop moment right now. I mean, I think Tim covered it all, right? No, we've got some good things to unpack here during the next few minutes. Henry's on with me. I think he'll have some questions as we kind of walk through some of these items. I thought I would actually start with the SPY, which is what Tim was talking about. I'm starting there because I'll show you here in just a second. Let me make sure that I'm actually sharing my screen. I've done that trick a couple of times. So SPY, and let me minimize one thing here. Okay. So SPY, what I did is I took this back to the beginning of January. And what I wanted to show you specifically here is actually periods in time when sentiment rises above neutral. SPY in general will be neutral almost all the time. That's because it's incorporating, think of it as incorporating blended characteristics, whether that's growth, whether that's value, and over time, it tends to equal out to be neutral pretty much all the time. What I wanted to show you going back to last year, and then I'll show you year to date this year, is what happens when sentiment actually starts to rise above neutral. What occurs in those conditions? Because we're actually there right now, and I'll show you that here in just a second. But let's go back to January 2023. Sentiment rises above neutral. Everything kind of flattens out for a little while, and then we have an advance. Very similar in April. Everything flattens out for a period of time. It advances. Very similar here in November. Conditions flatten out. Then they continue to advance into the end of the year. So you could say all of 2023 was very similar. It's kind of a temporary halt in terms of what's going on there. So that being said, let's take it to this year. As you can see, it's been neutral almost the entire year. We briefly went above neutral in, I believe that was August. Same thing. We flattened out for a period of time, a very brief advance, and then we moved lower. That was beginning of September when we moved lower there. You can barely see it here, but we're just starting to move above neutral again. So I just wanted to show you that while I had it on my screen. It's just something to be aware of that we're seeing over the last couple of years. Now, maybe it doesn't play out the same way, but at least at some point here in the next few days, I expect conditions to flatten out just a little bit. I want to shift over to something that we don't talk about very often. Henry mentioned it last week towards the end of our discussion, and it's our profiler. This was one of the first tools that we had with Market Structure Edge, and Tim does a good way of describing it. He describes it as a blunt instrument. But let me show you what this looks like if you do want to explore it. I'll just look at NVIDIA as an example. So there's three examples that are listed here, kind of three default mechanisms. One is buying when you're moving through 5 and then selling when it moves back below 5. Another one is buying upticks in share price, selling, upticks in demand or sentiment, selling downticks in demand or sentiment, and then buying ones and selling tens. But let me show you what this looks like just going through the defaults. So if we're looking at when sentiment is 5 and then selling 5 for NVIDIA, and this is covering 90 trading days, and it tells you what's happening with those circumstances. And you can unpack it down below. It would give you 3 time frames where you would enter into those trades. You can see what that looks like just by clicking on the arrow. You can see that you're buying when NVIDIA goes above 5, and then you're selling when it goes back below 5 back in July 22nd gives you the number of trading days that occurred there. Big picture, if you were looking at NVIDIA, like, oh, I wonder if that's good under those criteria. Well, you can tell right away it's lousy under this criteria. You can see that your trading would have been negative 22% versus buy and hold of 26% versus the SPY of 7%. It tells you the number of days that you would have been actually trading and what those trading periods looked like. So this one did not work. Let's look at the buy uptick and sell downtick and see what that looks like. If you look at this one, well, that's much better, isn't it? Your trading, you outperformed buy and hold 28% to 26%. Here's the kicker. Your active trading days were only 49 versus 90 trading days in the period. Trading periods were a total of 4. You can see the SPY during that time frame. Lastly, buying ones, selling tens. I don't think that happens very often during this period, but you can see active trading days 39. I mean, fairly similar, similar to buy and hold, but you accomplish that in only 39 trading days. Now, what this does not incorporate, you'll see there's no supply here, right? This is only demand, but it's also a good illustration of demand, just how powerful demand actually is in the marketplace. And of course, this is just NVIDIA. I just wanted to look at a name that we're all very familiar with. And I would say if you're interested in it, please ask me and Henry if you have any questions, but that's kind of the default. Let me just maybe take one other example. Let's go to Microsoft here for a second. Let me go out, come back in. Now you can set this up any way that you want to. If you want to set it up for 6 and then to sell it once again when it goes below 6, you could do that. I haven't tried it, but let's see what happens. Well, Microsoft from 510 to 918 using those criteria, didn't work very well. It was only 29 trading days, but it tells us that it wasn't above 6 that much. Let's try the buy uptick, sell downtick, see what happens there. That one worked much better. 8% returns versus 7% for the SPY. So you get the idea. You can try things over time. Recognize though that trading in general, it works in very short-term increments. So something that might work for this period might not work for the upcoming period. Let's say that we were in a growth environment for this particular period and we move into a value environment going forward. Maybe the profile that we set up might not work as well, going ahead. But if you are interested in a strategy that perhaps you're not buying and selling quite so often like you do with the daily trading ideas, then maybe this is something to think about and to play around with a little bit. There is an instructional video just right here. And any of us are, available if you have any questions about that. So I just wanted to take a couple of minutes to walk through that. I'll circle back here, see if I have any questions that I'm missing. Henry, any questions coming in?
Yeah, it looks like J Law has their hand raised.
Yeah, please.
I think they're on. I think you're J Law. Do you have a question? I think you're unmuted. Or do you want to just go ahead and drop? I'm not sure they're unmuted, but
okay. And we can circle back to that. So with the profiler, and thanks, Joe, for the input. I appreciate that. It's more of a longer term strategy, obviously very different from the daily trading ideas. Let me show you an example of another possibility for a little bit of a longer term strategy. So this is something that I saw a couple days ago. So energy had just been getting absolutely destroyed, got clocked at the beginning of the month. And what I was tracking, and I will sometimes do this, you can see I do it with financials as well. Sometimes I'll toss the 10 largest companies in a separate portfolio just to give me an idea of, are we getting some changes versus the sector as a whole? Because sometimes the larger companies can differ a little bit. What I was tracking just a few days ago, I think I entered the trade on the 16th, is I was looking at the big companies and sentiment was almost completely washed out. So we were 1.7 from a sentiment perspective. That was last Friday. My thinking as it came into Monday and we finally started to show a little bit of strength in some of the energy companies, I'm like, I'm going to give this a shot because we're very, very oversold from a sentiment perspective, and short volumes are low. They're not moving higher right now. So I just bought, I believe it was XLE, just for a sector play. And so far, through today, I made 4% so far through today's trading. Is that always going to work? No, of course not. So you have to, position size accordingly, and just be aware that, hey, it's a 1 right now, but it might stay a 1 for the next 2 or 3 weeks. You have no idea whether if something is oversold, whether it will bounce or how long it will take to bounce. So that's part of the reason that I got into a little bit of a value play from a sector perspective just a few days ago. For those who are interested in watching individual companies, I'm going to just show you something here if I can find it. So my gaining momentum portfolio, and I'll show you the criteria here. So this is if you're interested in more of picking up value plays, and I'll just let you take a screenshot if you're interested. This would be capturing companies that have sentiment between 2 and 5, but sentiment is starting to rise. You're capturing companies that are a little bit greater size. You're kind of weeding out some of the small caps. Short volume is moving lower. So it's some of the normal criteria that we're looking at in momentum or low volatility, but it's trying to capture the beginning of that cycle. So I just wanted to share that with you for those that, that perhaps don't want to trade all the time, or you like value investing. And I'll do that from time to time. I'm a little bit agnostic in terms of what type of trading that I do. I just kind of trade according to what the market's giving me. And when I was looking at my portfolio that day, I thought that was a good opportunity. So I just thought I would share that. Let me stop sharing for a second. Henry, any questions coming in?
No, there's not. The only thing that as you're talking, you know, each week we probably have, you know, a handful of users on here who exclusively day trade. We
Mhm.
have a handful of users who are using these to, mid sort of swing trade options. I think most of us within Edge and our other, partner company, Modern IR, are using Edge to rebalance our portfolios. And so I think that's really helpful to go through all three of those. Like, you can look at individual names and say, I have people all
Yeah,
the time like, they'll message me and they'll be like, "Hey, can you look at this thing?" And I'll be like, "You just need to subscribe." But the last thing I'll say is getting really familiar. I love what you said about watching SPY and then getting familiar with names like NVIDIA, or finding that subset that you're very familiar with, and
mhm.
taking what the market gives you, whether it's in energy or it's in tech. I think those are all good points. And
Yeah,
just to say it again, you can apply it in a lot of different. Depending on your style of trading, because we know there's a lot of different styles within this room. Um, it's all applicable. So
yeah,
I
yeah.
just want to reiterate that point.
No, that's terrific. Brad, I see your question. Thank you very much. Let me move to Ron's for a second, and I'll come back to yours, Brad. Yes, Ron, we'll have the recording available afterwards. Usually that's the next day, unless there's an issue with getting it done tonight. If so, then we usually have it available on Monday. But you'll see that with the market desk notes. Brad, to your question about what the supply indicator is showing. Is it option volume? Is it uptick trades? What exactly is going on there? So let me share my screen again. We'll circle back to just broad market sentiment as an example. So what we're looking at, and this is an average then of the S&P 500. It's what we call short volume. The way that you can think of that, the easy definition that I use in my head is borrowed shares. The market as a whole, believe it or not, has about 50% of trading that comes from borrowed shares. That's roughly the average in the S&P 500 over the last year. So the way that you can think of that, if you have 100 shares to buy, um, let's just say, I'm buying XYZ, I'm buying 100 shares. 50 of those shares for that execution will come from borrowed shares. Part of the reason for that is brokers just don't carry as much inventory as they once did. They're really not allowed to. So there's less inventory out there. The market makers will borrow shares to facilitate trading. It's just a very natural. It's just the way that the market operates right now. What we want to do in terms of short volume then is to look. There's different ways to think about it, but look at it relative to the norms. And let me show you. This is a report on the Modern IR side. But what I wanted to show you was S&P 500 short volumes over time. So here's the norms for the last 200 days. It's roughly 50%. If we get much above that, well, that tends to be a period where it's going to be difficult for trading. There's excess supply that's in the market. Take a peek at what happened as short volumes started to rise. This is a very normal condition in the market. If short volume is rising and demand here in green is moving lower, what's generally going to happen? Well, the market's going to fall. That's exactly what occurred. What's going to happen generally if shorts start to get covered? What's going to be more conducive for market appreciation? That's exactly what happened as well. Does that help to address the question? And Henry, I'll let you pick that up if there's any questions there. Let me circle over for a second. I mentioned the daily average. This is not something that you'll see in Edge, but I just want to go behind the scenes for a second and show you what this looks like. Note here what happened as we started to turn. And what I mean What you see over here is sentiment daily. This is the 5-day average that you'll see uh, on edge. So it's very normal, especially during a turn, to start to see like a slow move higher in the daily levels. Moving higher by point 0.2, point 0.3. That's very normal conditions. Look at what happened yesterday. So as the market, tumbled lower at the close, below the surface, everyone was actually getting ready for upside. And we can see that very clearly in the daily average. And this number will increase over time. Once again, it's a 5-day average, but I just wanted to share with you, what was happening there, because that was pretty incredible. I want to circle back to, let's just go to big tech for a second. We were talking about ways that you can use this for trading, whether it's daily trading ideas, whether it's crafting your portfolio over time. One thing that is really helpful for me is avoiding losses, and I'll be honest with you. And what's been helping me out a lot is just don't catch the falling knife. You've heard that expression before. If sentiment is falling in big tech, that's not a good time to pick up big tech, or really, we know how much big tech influences the market. That's not a good time, to be going long the market. When is a good time to go long the market, or to start bottom fishing or value investing for big tech? Well, when it stops falling. Look at big tech start to stabilize. What starts to happen from a broad market perspective? The broad market starts to stabilize as well. I shared with you energy earlier. I'll go back to that, for just a second. If you were looking at energy stocks getting killed, and you're like, oh, when should I go back into energy? Well, not here, not here, not here. When does it start to stabilize? And that would be a good time to consider it. Once again, knowing that, hey, it might not, get much lift, but set your stop losses accordingly. So we've covered a few things there. Let me stop my screen share for a second, see if we have any questions to address. Anything coming in, Henry?
There's no, we just have positive feedback on using Edge, and I think that's what a lot of our users tend to come from, and I know I did, is like a really technical perspective. And the thing about tech, the reason we use behaviors in Edge is because we understand what's driving the market, and that the price indicators and technicals are only go so far. So you really have to understand both the calendar and the cadence of the market, but also understanding what sort of buying and selling is actually happening and how that's influencing price. So yeah, just some positive feedback, and then some people asking if we can share our P&Ls, which is not posting into the chat. Thanks. So.
My P&L personally is a little, it's tied up in my retirement account, so it's not a clean look. I think Tim, I would email Tim if you have a question on that. He's got more of a clean look in terms of P&L over time, and then he incorporates everything that we're talking about. The daily trading ideas. If he sees opportunities, from a broad market perspective, hey, this is overbought, this is oversold. Everything that he does, is using market structure dynamics. Let's go ahead and take a look at what we might see as we look ahead. And there's a couple things to talk about here, and Henry, I'll let you speak into that as well. As we begin this discussion, recognize where we're at right now, and maybe I'll shift over to our calendar. You'll hear us talk about it We try to tell you what's coming up. You can go and look there yourself. Just look under resources, expirations calendar, and this will give you everything that's coming up. So we're right here on the 19th. We're in the middle of options expirations, fairly clean next week, and then we'll move into month end activity. For those that are new to expirations related activity, this is kind of the way that you can think about the cadence. So we'll conclude expirations on Friday. And once again, this is a triple witch expirations. It's also S&P index rebalances. Expect heavy trading volumes tomorrow. Monday, the focus will shift to the October series. So this is a point in time. This point in time concludes. Focus shifts to the October series on Monday. Tuesday, this is a modern IR term. Maybe it'll catch on in the market over time. We call it Counterparty Tuesday. It's when all the big banks and brokers assess their inventory. We've just come through expirations. The focus has shifted to that October series. How's everybody doing? Are they holding too much inventory? Are they not holding enough inventory? The point is, you can see a little bit of volatility both on Monday and Tuesday as well. It doesn't mean I stay out of the market, but I'm just aware that that volatility has the potential to be there. Wednesday is really when we get a clean look at the market. Of course, we immediately move into month-end activity, which will also be quarter-end activity as well. So we've got some moving parts coming up here as we look ahead. I mentioned earlier that SPY look in terms of sentiment rising for SPY. That's good, but it tends to, and let me shift back there for those that maybe weren't there at the beginning of our discussion. So what generally happens, and I'll show you once again the year-to-date look, is when SPY rises above 5 from a sentiment perspective. It's just doing it right now. It's only happened one time this year. I won't go back to 2023, but it tends to flatten out increases. For most of 2023, that meant a brief period of flattening out, consolidation, call it whatever you want. And then, for 2023, the market continued to go higher. Now, each time is different, but I think I would expect something similar coming up somewhere in the next few days. We are coming up to an inflection point, and what I mean by that from a broad market perspective is we're coming up to the end of expirations. What does that look like? We've seen short covering coming into the conclusion of expirations. Does that continue coming out the other side, or do strategies change? Once again, point in time, this expiration cycle is going to be completed, and we'll have a brand new one coming up. If we look back to August trading, we had about 3 weeks where we were basically right at, let's call it neutral, right at about 50%. There seemed to be a market hedge in play. Sometimes you don't know exactly what's going on behind the scenes, but that was not a normal period by any stretch of the imagination. What does it look like coming out the other side of this expiration cycle? I don't know. It's why we watch the data, and it's why we provide the daily notes to you guys. I think that's really it. Just be aware we're coming up on really 2 inflection points coming out of this expiration cycle and coming up to quarter end activity. We're market participants. Sometimes will, at times they're trying to think about how they're going to play catch up. If you have hedge funds that are behind the 8 ball so far this year, how can they try to play catch up as we get into the fourth quarter? So all these things are kind of going on behind the scenes, as we look ahead. Henry, what's happening from your perspective?
Yeah, I mean, here's what I would say is that we've been so event driven, and the amount, the bets that were placed on, both the hedges and the bets long that were placed on the interest rate. and that's going to hash out. Like I think what we're seeing today is that buying continues. The thing I was going to show was, and you can pull it up, is continuing to look at like kind of the four big names in big tech, and just recognize that those short volumes are still relatively low. So what we've seen the last few months is that the risk event is actually, new month. And so we're not, we're
Mhm.
definitely not seeing like a risk off today. It's, sort of the opposite. Um, if we have a good day tomorrow, there's a chance that by Wednesday banks are sort of too much inventory. So that's the next thing I'm looking for. If tomorrow's like sort of, it'll be a bouncy morning. But if we stay within a pretty tight range and push higher through like Monday and Tuesday, I'm expecting that Wednesday the banks would have to unload a little bit of inventory. But even still, I'm looking that there's not a ton of risk events through the end of the month. So those are the speed bumps. If we keep going higher, Wednesday would be the speed bump.
Mhm.
But then I'm really like, not looking, there's nothing nothing's going to spook until maybe, it's not even a spook. It's just the fact that, we're going to get to the end of the month and expirations, and everybody gets to decide if they want to re-up. And that, that tends to cause
Correct.
a little sell off. So that's kind of what I was saying is like, I'm not seeing from being so event driven, I'm not seeing where that's coming from right now. And that's kind of, what I'm coming to expect. Like I'm not pulling anything from my account or hedging anything right now. Sort of waiting until we get through this, because there's not a lot to say no to at this moment.
Mhm. Yeah. No, it's some very, very good points. Corey, you had a question. When is the data available? That'll be an overnight update. It's usually 1 or 2 in the morning. Henry, thank you. 2:30 a.m. Eastern time. So that data is available typically by early morning. Any questions that we can address for anyone before we take off today? Ron, to your question, can go both ways. Personally, I trade more stocks, but I do trade options. For me, when I'm trading options, it's more of an opportunity trade. I see that, you know, I'll give you an example. Let's say that normal volatility in Microsoft is 2% on a given day, and there's really no news out in Microsoft, and it's up, 4% that day or what have you. I might buy an out of the money put, knowing that Microsoft's normal intraday volatility, I've got those facts readily available, and I know it's out in front of its skis. That's been a pretty successful trade for me, is just looking for things that are too oversold or too overbought, and then buying out of the money either puts or calls, against those. And there's a million ways that you can, trade those options, but that's just one option. I think most of our users are typically trading stocks, but we do have a lot of users that are trading options as well. Well, guys, I think we have come to the end of our time today. Thank you once again, Tim, for jumping on the road. Thanks for your participation, Henry. When we catch up next, we will have moved past this expirations time frame, and we'll be very close to month end. Wishing you guys all just a wonderful rest of the day, and we'll catch you next week.